on board Sanjiv Bhasin as well and figure out what he's making of the market right now. Sanjiv, not looking bad. I mean, we've been ranged sideways a little bit, but that's okay. We're still holding around the 22,200 thereabout print. What is it that you've made of the recent spate of numbers? We discussed Mankind Pharma in the morning, and now M&M as well has come out with superb numbers.
Yes, I think earnings are a beat. Look at Hindustan Aeronautics. So I think numbers are very, very strong, and that is telling you that this volatility is not there to uncertain you. It is there to give you an opportunity to buy. And look at what you want, to make your portfolio. So I still think Hindustan Aeronautics, even though a large part of the run-up is in the price, numbers and the margins are very, very strong. I would also like, yes, Mahindra has been a star outperformer where we expected tractor sale or farm output to low, but their farm other equipment has done very, very well. So I think overall numbers are very, very strong, and that's telling you that the undertone of FI selling is there because of the China factor and other things, but we are now looking well on course to go higher. And I think if you are in the correct stocks, then you are definitely good. Today, there has been a huge bout of profit booking in PSUs. So I would say start looking at names like IOC, start looking at names like SAIL, because there we are very, very positive. NALCO, SAIL, and IOC. IOC would be my top pick over here. I think PSUs are giving you an opportunity. Try and get into good names.
Are giving you the opportunity to try and look for those good names, but the other opportunity perhaps which is not there right now is on the likes of Honeywell, etc., that have shot up quite massively, 8%, and it's not a tradable stock in that sense, because the price is almost $53,000 on that one. Nomura had actually sizably upgraded the stock to a value of almost 53,600 if I remember it right on the target, which it's managed to hit already versus 46. And the other one I want to talk about is Oberoi Realty, because that stock is higher by 9%. Mr. Bhasin, within the industrials, whether it's Siemens, ABB and now Honeywell, all have reported good set of numbers and I've seen a reaction too. Is there any stock in industrials or capital goods which is still a buying opportunity?
Joined the stock market in 1989. Honeywell was the first company I bought, and I still have some shares of it at a price of 89 rupees. I think this is headed to 1 lakh. Honeywell is in your digital automation. It's in everyday life. It's a Dow component. And the type of run-up you've seen in manufacturing, I think Honeywell has just started. So fingers crossed, maybe 75,000 can come in the next 2 years. But as a disclosure, this has been one of my first stocks which I bought when I entered the stock market.
Quite a bit of trivia. One of the first stocks that you bought, it's at 53, headed for 1 lakh and 75,000 imminent on that stock. Good to know that bit. But separately, you have Bandhan Bank, Canara Bank that are coming under pressure, and other PSUs as well, despite the news that we were flashing on the screen that there could be some relaxation on the minimum public shareholding norms. We got that relaxation for LIC. The stock had shot up 7%. And now it seems the government is saying that for some of the PSU banks, they might extend the timeline to meet the MPS timeline, but nonetheless the stocks are not recovering. Kunal, on Bandhan Bank, what does the chart suggest? And even Canara Bank, surprising downticks with no specific news flow as such.
Yeah, I think Bandhan Bank, there's been a disappointing chart. I remember, I think, tracking the stock when it was almost at 260, few quarters back, and from there the stock had started to get into a very sharp corrective mode. I think over the last 6 odd months, or maybe more than that, the stock has been forming a pattern of lower highs and lower lows. So it doesn't come as a surprise that the stock is underperforming even at current levels. It's still some distance away from breaking below the previous supports. I think 175 is the previous support for Bandhan Bank. Maybe that level could be broken down.
Okay, but let's address M&M's earnings, because the management is addressing the press as well.
Yes, it's a tougher interest rate environment, but despite that, the business has performed very well, delivering a profit after tax of 1,760 crores, and this is after the 136 crore provision that we had to take for the fraud that I talked about earlier. Tech Mahindra has initiated its turnaround. It will be a 2 to 3 year journey. So we want to make sure that we don't set expectations of an immediate outcome. It will take that time. The demand cycle continues to be muted, but the operational rigor we have right now is very strong, and that's what will help us get back to a much stronger path and back to the goals that we've set for ourselves that you've heard in the Tech Mahindra presentation that Mohit Joshi had done a couple of weeks ago. As you look at our listed growth gems, logistics has had some challenges in the integration of Rivigo. That is behind us now. Things are moving very well on that front. That did impact some of the results for last year, as was seen in the logistics presentation, again, 2 or 3 weeks ago. Revenues up 7%, EBITDA margins up. Hospitality continues to do very well, and a business that has a lot more potential. So we will look for more significant growth from hospitality. And real estate has had strong momentum. The industry is doing well. We've launched 8 new residential projects, and the response to that has been just outstanding. So pre-sales for residential up 28%. More importantly, we've acquired 4x the amount of land from a GDV standpoint, and that sets up the business well for future growth. So as you can see, therefore, our businesses are doing well across the board, and that's what's really driving our cash flow. And this is something that we feel very good about. We started with an opening balance of 15,238 crores of cash. What you see here is where that's coming from, where that has been used. The key numbers I will highlight is that operating cash was close to 15,000 crores in this business. CapEx of 5,000. In addition to that, electric vehicles 3,000. We've paid back 3,500 crores of debt and a dividend of 2,000 crores. And even after that payment, we closed the year with 17,600 crores of cash. So obviously a very, very strong balance sheet. Very low on debt at this point in time. It's just a remaining small amount of debt that cannot be prepaid right now. That's on the books. But overall, an extremely healthy balance sheet, and one that really sets us up well for the continued growth plan that we've laid out. So as we look at the 3-year projections that we had shared in the past and outlined where we've ended up versus the 3-year projections, we actually ended up better than what we had talked about earlier. So operating cash over the 3-year period was 37,000 crores. Deployment was 17,000. And therefore, from a net cash generation standpoint, we generated close to 20,000 crores of cash in the last 3 years.
If you like this video, then like, share and subscribe to ET Now.